Let us see the next question. Mr. Y has invested in three mutual funds as per the following details. Again, the particulars and three columns have been given. I am ignoring the second and the third column. I am reading particulars and mutual fund X. Amount of investment is given, an amount of 2 lakhs. NAV at the time of purchase is given, NAV 0, 10 rupee 30 paise. Dividend received by end of 3 months is 6,000 rupees. On 31st of March, NAV is given 10 rupee 25 paise. Effective yield per annum on 31st of March is given in percentage term 9.66 percentage. 1 year is equal to 365 days. Mr. Y has misplaced the documents of his investment. Help him in finding date of his original investment after ascertaining the following. First, number of units in each scheme. Second is the total net asset value. Third is total yield. Fourth is number of days for which investment is held. And fifth is date of investment. So there are basically say 5 questions which they have provided to us. That's it, you are required to make the computation with respect to each of the mutual fund. A few questions like this. I request all of you to go through the question, then we'll discuss how to do answer. Just go through the question, all of you. Let us have first of all a discussion how to calculate answer of the question. I request you to use your calculator along with me. See, the first question says that say compute the number of units in each of the scheme. So use your calculator. 2 lakhs upon 10.3. Okay, this is the amount of the investment, 2 lakhs, and this is the NAV per unit on the entry date. So that comes to 19,417.476. Or you can do answer up to 2 decimal also, that's also fine. Practically the units are allotted to the investor up to 5 decimal points, but there is no need to go for so many points. We can go up to 2 or 3 decimal points. The question says that to compute the NAV. So we already have the number of units, yes. We have the NAV at the end of the period, yes. So 19,417.476 into 10 rupee 25 paise. So it comes to 1,99,029.129. That is the way we can compute the total net asset value. Third question is the computation of the total yield. So the total return is required to be calculated. For that, so there are two things that we will take into account. One is the change in the units value. We understand that say 1,99,029.129 minus 2 lakhs. So there is a reduction by 970.871. However, there is a dividend income of 6,000. So the total income is 5029.129. This is the total yield. Total yield is consisting of one, the dividend income, and second, it is the change in the units value. Fourth question, number of days the investment held. Now for doing fourth question, friends, we are required to use the formula. Return is equal to income upon investment into 365 divided by n into 100. Do we have the return? Yes, we have 9.66%. Do we have income? Yes, 5029.129. Do we have investment? Yes, an amount of 2 lakhs. 365 is a number only, 100 is a number only. So n would be calculated as balancing figure. Based on that, so you will compute the number of days investment held. And last, the date of the original investment. Whatever the number of days for which you are holding the investment will be deducted from 31st of March. And based on that, say we can compute the date of investment. So let us see answer of the questions. Answer of the first question. The first question is, what is the number of units in each of the scheme? So answer is, number of units in each scheme. It is investment divided by net asset value on entry date. Or we can say that the purchase price of the investment, that is either of the way you can write answer. So mutual fund X, mutual fund Y and mutual fund Z. There are three mutual funds in which you have made investment. As far as the X mutual fund is concerned, amount of investment is 2 lakhs. For Y it is 4 lakhs. And for Z it is again 2 lakhs. Divided by NAV per unit. In the first case it is 10.3. In the second case it is 10.10. And in the third case it is 10 rupees per unit. So 2 lakhs upon 10.3. 19,417.48. This is the number of units. In second case, 4 lakhs upon 10.10. 39,603.96. And in the last case, it is 20,000 number of units. This is the way the number of units of the investment to be calculated. Second part of the question, what is total NAV? So second part of the question, let us see how to make the computation of answer. It is mutual fund X, mutual fund Y and mutual fund Z. Total. We understand that's the units value. For X mutual fund it is 19,417.48. Into NAV per unit, that is an amount of 10 rupee 25 paise. Next, 39,603.96 into 10 rupees. That is NAV at the end of the 3 months is required to be mentioned over here. And in the last case it is 10.2. So 20,000 into 10 rupee 20 paise. So 19,417.48 into 10.25. 1,99,029.17. Then 3,96,039.60 and 2,04,000 plus 396,039.6 plus 1,99,029.17. So the total is 7,99,068.77. This is the total NAV. Next question is calculation of the total yield. Yield means return. So answer for the third question. Calculation of total yield. How it will be found? It is dividend income plus NAV1 minus investment. That is the way, so the total yield can be calculated. mutual fund X, mutual fund Y, and mutual fund Z. The amount of the dividend income is 6,000, 0, and 5,000. Plus the amount of the NAV1 is this 1,99029.17 minus 2 lakhs. 3,96,039.6 minus an amount of 4 lakhs. It is 2,04,000 minus 2 lakhs. That is the way we are required to compute the total yield. One double 9,029.17 minus 2 lakhs plus 6,000. So 5,029.17. 396,039.6 minus 4 lakhs. 3,960.4. 4 plus 5, that comes to 9,000. That is the way the total yield can be calculated. Overall, it is 10,068.77. Please write an answer. Next question. Number of days for the investment held, and with that only I wish to make the computation of the date of the investment. I want you to tell me that what is the date of investment for mutual fund X. You write down your answer in the chat box. And one more thing that I would like to tell you is that you can see that this is a question that we have done subsequent to a question wherein similar information was given and you were supposed to make the calculation of the return. Now this time you don't have to make the computation of the return, and this time you are required to make the computation of the number of days of investment held, and based on that the date of the investment. So you can see that instead of going forward, this is a question wherein you are required to go backward with the return information. So this kind of change will be there in examination question number of times. Try to do fourth answer on your own for mutual fund X, and along with that tell me that's the date of investment. So write an answer. For X mutual fund, time period. We understand that the return is equal to income upon investment into 365 divided by n into 100. This is what we understand. As far as the mutual fund X is concerned, the return is 9.66. As far as the income is concerned, 5029.17. Upon investment is 2 lakhs. Into 365 divided by n into 100. So n is equal to 5029.17 into 365 into 100 divided by 2 lakhs into 9.66. This is the way number of days will be calculated. 5029.17 into 365.00 divided by 2 lakhs divided by 9.66. it comes to 95.01. So it is 95 days. Now we are required to do backward working. Month, days and cumulative days. March 31, February 28. So in that case it comes to 59. January 31. So this is 90. December is okay. Now we understand that say in the month of December the investment must have been made, because 95 minus 19, so it is 5 days of the December. So date of investment is 31 minus 5, that comes to 26th December. That is the way number of days can be calculated. This is the way the date of investment is required to be found for mutual fund X, and similarly for Y and Z. Next is mutual fund Y. In that again number of days. So based on this equation that we have written, you can answer it directly. N can be calculated as income upon investment into 365 days upon return into 100. This is what we understand. As far as the income of Y mutual fund is concerned, it is 3960.4 negative. 3960.4 negative. Amount of the investment 4 lakhs. Into 365 upon negative 11.66 into 100. So this negative is converted to positive. This negative is converted to again positive. So 3960.4 into 365 into 100 upon 4 lakhs upon 11.66. That comes to 30.99. That comes to 31 days. So date of investment is 20th of February. This is what we understand. Friends, over here the institute has given suggested answer, wherein say they have considered this 31 days to be calculated next from the date on which the investment is made. That is what the kind of suggested answer is given by the institute. If at all we write the answer 1st of March, I believe it is also correct, because taking into account the date on which the investment is made, from that also the number of days can be calculated. So either of the ways a giving answer is say absolutely correct. Right now I have done answer as per ICAI suggested answer. Next, mutual fund Z. In that case again, N is equal to income upon investment into 365 upon return into 100. In case of Z mutual fund, it is an amount of 9,000 rupees. Investment 2 lakhs into 365 upon 24.15 into 100. So it is 68.01. So we can say it is 68 days. Again we are required to do backward working. So month, days, cumulative days. March, February, January. In January, we do not have to take entire 68 minus 59, that is 9 days. So date of investment is 31 minus 9, that is 22, that is 22nd January. That is the date of investment. And friends, just I would like to clarify, suppose the year of the investment, that is say the year which is provided to us, in which it is leap year and it is the February month is there, say in that calculation of number of days, then instead it takes over here 29 days and number of days in a year will be taken 365 only. These are not at all conceptual points. These are the suggested answers which they have given, which I just tell you. So these are not the conceptual points, and for that say there is no like the additional things that I can tell you. So giving summary of the entire answer. In the first question, we are required to calculate the number of units in each scheme. That is the investment upon NAV on the entry date. The second is the units value at the end of the period. That is number of units into NAV per unit. Next is the calculation of the total return. That is dividend income plus change in the units value. Next is the time period of holding investment of the each mutual fund. And say based on that, so the date of the investment. So 31st of March minus number of days of holding investment will give you so the date of investment. That is the way we are required to compute the date of investment, say for each of the mutual fund plan.